What's going on, everyone? My name's Obi and welcome back to Courtside Financial. Today we're going to be talking about the stock market crash that's going on right now. It's not really a crash, but I'm going to give my perspective and my thoughts on it. If you're new to the channel, make sure you hit that subscribe button so you don't miss out on any videos, and also make sure you hit the like button because it really does go a long way in helping out the channel. Lastly, if you want to be a part of the conversation before it happens here on YouTube, click the link in the description to join the free Courtside Financial Discord. When you open up your new brokerage account, you'll receive one free stock valued anywhere from $2.50 to $250. And when you make that initial deposit of $100 or more, you'll receive another free stock, and this free stock will be valued anywhere from $8 to $1,600. Lastly, cryptocurrency is now available on WeBull, so you can trade cryptocurrency on the platform with zero commission. Okay, so where do I even begin? It seems like just a few weeks ago, the sun was shining every day and everyone was really excited about the markets. Now, if we look up today, there's a lot of panic and people worried. A few weeks ago, I even put out a video saying that a lot of people are probably going to get hurt in this market because they're engaging in risky behaviors, and there's more people doing that than ever. This is why I did this live stream in the first place, right? The state of the market is really everyone just FOMOing into stocks, just looking at companies that are going up, like, oh, this company went up this year, it's got to go up this year. Like, people who don't know what they're doing. And in a bear market, you're going to see who knows what they're doing and who doesn't know what they're doing. There's people who are going to leave the stock market and end up leaving because they're frustrated because they invested into terrible companies, with business models that show no signs of viability in the future. So more people engaging in risky behaviors than ever means more people going on margin than ever. Shout out to Yardini Research for always posting relevant information. But if we look at this chart, in 2021, margin debt is higher than it ever was. So people aren't just putting their last dollars into stocks, people are putting more than their last dollars into stocks. And what people don't understand is that markets are cyclical. There's booms and busts, and that can happen on a micro or macro level. But anyways, when the market turns around and you've got all your money in margin, that puts you in a position of weakness. You can get margin called, and then if you can't come up with the cash on the spot, you're going to be forced to have to get rid of some of your positions to cover the margin call. And the consequences of that can lead to, one, a taxable event. Two, that can take you out of a position and not give you the opportunity to buy back in. So this is just a cautionary piece here. The market is pretty much a marathon, and patience is very important. Margin magnifies your losses, and it's only for the experience. If it's done wrong, the consequences can be horrific. And a lot of good investors will tell you they don't use margin and they don't really need it. Hey, what's going on in the market? The Dow down 1.11%. The S&P 500 down 1.34%. The NASDAQ down 2.11%. Tech leads the losers in the market right now. The 10-year T-note is up today at 1.564%. So as of recently, bond yields have just continued to creep up, while stocks have been continuing to decline. I don't invest in bonds, and I probably never will. I'll let you know when or if that happens. But when bond yields start to rise, that means that investors are weary of inflation around the corner. So investors are actually worried about frothy valuations in the stock market right now because of Jerome Powell's comments at the Federal Reserve. People have expectations with yields rising of higher borrowing costs for companies, and then on top of that, like I said, inflation. But in my opinion, this is a short-term headwind for the market, right? Because stocks tend to do well with inflation over the long run. It's just a lot of investor uncertainty right now. But in my opinion, this is a short-term headwind because inflation bodes well for the market over the long term, right? It's going to cost you more dollars to buy a good or a service. So that gets factored into asset prices, whether it be stocks, whether it be real estate, whether it be cryptocurrency. Prices go up when the money supply increases. But to be honest, with everything going on in this market right now, the way I look at it, from the perspective of a long-term investor, is, does it all really matter if you're a long-term investor? From my perspective personally, and it's really hard, but you can't get too high on the highs and you can't get too low on the lows. Like I said, markets are cyclical. There are going to be booms and busts. There are going to be There are going to be times when the market charges ahead. There are going to be times when the market faces a pullback. And this is going to happen so many times until I'm ready to cash out eventually, which will be years and years down the line. So I have to be ready for the volatility. And in my opinion, you actually look forward to the volatility. Stuff was getting really expensive in this market. That was making things a lot harder to buy. Great companies a lot harder to buy. It was kind of like finding a needle in a haystack to go find a company with fair value. But on top of that, you're going to make more money long term when stocks are going down. You're going to make more money short term when stocks are going up. But long term money and short term money are two different things in my opinion. So buying more stocks at higher valuations is something that it should be kind of hard to be happy about. But hey, that's just my opinion on what's going on in the market right now. As I look at it right now, like I mentioned, I just bought some NEO on the pullback. I did feel like for myself personally, it was time to start shopping, but I don't feel like things are ridiculously undervalued right now still. And who knows, things can snap back, but I don't try to time the market. I put money in consistently, and I put even more money in on red days. So that's going to be it for this video. I want to know what you guys think. Make sure you hit the like button, make sure you hit the subscribe button, leave me a comment down below. As always, thanks for watching. I'll link the free Discord in the description below as well, and I'll catch you guys in the next video.